Ms. Williams. I'm not a fan of bifurcated regulation. I think it's had some very adverse consequences. But as I mentioned in my opening statement, the number of existing or proposed servicing standards is pretty daunting. We've got HAMP, FHFA for Fannie and Freddie, individual state laws, bank regulator consent orders, the bank regulator joint interagency initiative, the legal settlement reported in the press. You've got risk retention for qualified residential mortgages. You've got congressional proposals. You've got the potential activity by the CFPB. And I quoted from the New York Times in terms of the overhang or the inability here. I think you've got some 60 years worth in New York State in order to work through the backlog. So you mentioned in your prepared testimony that the OCC supports the development of a uniform servicing standard. And you are all working with the various regulatory agencies to come up with such a standard. I wanted to ask you about that. And I was going to say, looking at the backlog of foreclosures throughout the country, what impact does the lack of a clearly defined set of rules have on the confusion throughout the market? Is that adding to the delays, and does that add perhaps to recovery when you've got that amount of confusion out there?
To the extent that lenders and servicers are uncertain about what the rules of the road are in proceeding with their mortgage servicing and with the foreclosure process, that does slow down that process. And as I said in my testimony, there are underway right now a number of different initiatives that deal with mortgage servicing in the larger sense, mortgage servicing with respect to current and performing loans, loss mitigation, including loan modification efforts, and also the foreclosure process end of mortgage servicing. And we do think that it is very important for the different players to try to bring those together to be as consistent as possible, so that there is a single set of standards to the extent possible, so that the servicers clearly know what is expected of them, and so that customers know what to expect from their servicer.
The committee's heard a lot about coordinated rulemaking efforts. Mm-hmm. I can just give you my take on this, sitting through the hearings and then talking to people in the regulatory community about their feelings. And the truth seems to be that there's little communication and coordination occurring in many, many ways, partly due to regulatory turf battles, partly the fact that we just don't have this one clear set of rules. And I think it's in everybody's interest to see that this is done right. But let's say for a minute the New York Times is right in this story of a week and a half ago. Let's say that New York State, that it will really take lenders 62 years at the current pace. What might that portend going forward? How are we going to see a return to the private market when we're building so many inconsistencies into the system?
Congressman, I don't recall all of the details of the article that you're referring to, but if it's premised on the current pace, one would hope that current pace isn't going to be the pace going forward once we get some clarity in the standards that are expected going forward.
Well, as the story goes through also other states, New Jersey, 49 years, Florida, Massachusetts, Illinois. It would take about a decade in those states. So, again, we're dealing here with bifurcated regulation, with 50 different states with 50 different sets of rules, And even at the federal level, bifurcated regulation without the common standard yet, until we get it, it's hard to figure out how we move out of this morass and sort things through in the marketplace with respect to the overhang. I yield back, Madam Chair.
Gentleman yields